All right, let's get right into it. You and I, we spend all our time trying to guess what the market's going to do next. But what if you could just get a peek inside the mind and maybe more importantly, the portfolio of the greatest investor alive? Well, today, that's exactly what we're doing. We are cracking open the vault and decoding the secret blueprint Warren Buffett is using as we speak. And I mean, really putting their money. Not the stuff they talk about on TV, but the actual billion-dollar bets they're placing behind closed doors. Well, we've got the inside track, so let's follow the money. Okay, so before we get to all the juicy new moves, we have to understand the foundation. I mean, you can't figure out where a master strategist is going next unless you know where they're standing right now. So let's take a quick look at the bedrock of this whole empire. So what you see here, it's just pure conviction. This is not a shotgun approach, right? It's not 100 different little bets. These are 5 colossal bets that tell a really clear story. Of course, you've got the heavyweight champ, Apple, sitting at around 22%. But then look at the others. American Express, Bank of America, Coca-Cola, Chevron. I mean, this is basically a fortress built on the absolute cornerstones of the American economy: finance, consumer goods, and energy. But look, that foundation, that's kind of old news. The real story, the clues that tell us what he's thinking about the future, well, they're hidden in the changes. This is where we get to play detective. Exactly. Because in this high-stakes game, what you don't do is just as important as what you do. But what you change, now that's a statement. And believe me, Buffett has been making some very, very loud statements lately. And this is where things get really fascinating. Check out this contrast. On one side, he's buying into stuff like UnitedHealth, a total beast in healthcare, a super defensive play. And, get this, Corp. Yeah, the king of swimming pool supplies, a surprisingly tough little business. And on the other side, he's trimming Apple, his biggest winner ever, and he's completely dumping his stake in T-Mobile. What is going on here? I mean, that's the billion-dollar question, right? Selling high-flying tech and telecom to buy healthcare and pool supplies? It feels weird, but you just know there's a much deeper strategy at play. Okay, so to really understand the whole blueprint, we've got to zoom in on the biggest piece on the chessboard, Apple. Why did he bet so heavily on it to begin with? And, maybe more importantly, why on earth is he cashing in some of those chips now? Okay, so it all comes down to this one core idea that Buffett lives by. It's called the economic moat. And forget all the complex financial jargon for a second. Just picture a castle. A really great business is like an impenetrable castle. And its competitive advantage? That's the giant moat around it, filled with crocodiles that keeps all the competition out. And let me tell you, Apple's moat is one of the widest in the entire world. First, you've got insane brand loyalty. I mean, people will literally line up for days for a new phone. Second, there's that sticky ecosystem. You know what I'm talking about. Once all your photos, your music, your apps are in there, it's just a massive pain to switch. And all of that leads to the third and most powerful part, pricing power. They can basically charge whatever they want and we pay it. So yeah, if it's such an amazing, perfect company, why sell off 20 million shares? It sounds nuts, right? Why would you touch a masterpiece? But this, my friends, is where the plot thickens. This isn't about him losing faith in Apple. No. This is about a grandmaster playing chess while the rest of us are still setting up the checkers board. So it really boils down to 3 big reasons. Reason number 1, just pure discipline. He's locking in some absolutely historic gains. Reason number 2, valuation concerns. Look, when he first bought into Apple, it was a steal. Now, it's gotten pretty pricey. He's a value guy at heart. He buys cheap and sells expensive. But reason number 3, this is the big one. He is building a massive, massive war chest. $344 billion. Just let that number sink in for a second. That is not just a rainy day fund. That's a historic pile of cash, of dry powder, just sitting on the sidelines, waiting for the right moment to pounce. He's getting ready for something big. All right, so what does this all add up to when you start connecting the dots? Selling off the expensive tech, buying into these durable real-world businesses, and hoarding a record-breaking pile of cash? A really, really clear picture starts to emerge. And here it is. This is the big takeaway. The strategy is crystal clear. Cash in on the tech that's gotten overvalued so you can go bargain hunting in durable, real-world industries. He's signaling that he thinks the best deals coming up aren't going to be in Silicon Valley. They're going to be in the bedrock of the real economy. So, the big message here is that the world's greatest value investor is basically telling us that value isn't where everyone else is looking right now. And that leaves us with the real cliffhanger. When he finally decides to deploy that $344 billion, where is he going to strike first? Now, if you're intrigued by this kind of analysis, our channel is absolutely packed with deep dives on tons of other fascinating